Hello everyone, welcome to the channel. André Cardoso here. As always, thank you for being here. I want to cover a couple of charts with you. Let's start today with the dollar versus the Canadian, which is already threatening the fractal support level 133.21. So that opens the door to a move towards the 200% Fibonacci level. We have a nice edge and shoulders pattern formation printed above that fractal. And we have targets projected at 132.08 for the dollar versus the Canadian. That being said, if I expect the dollar versus the CAD to start to fall, we should expect the crude oil to trade higher. So we have crude oil also being supported by this ascending trend line support. We have also an ascending channel which may unfold over time. Let's see how the market will react once we approach the highs of this potential ascending channel resistance. Of course, we have also the very first Fibonacci level from a major retracement. So we have the previous structure highs from March last year at 131.30. We are already approaching the very first 23% Fibonacci retracement level, a clear breakout above this Fibonacci level, which implies also a clear breakout above these fractals printed above and the previous pivot zone. So we need to recover above this previous structure support for that to happen. But a clear breakout above this price zone should trigger a retest of these highs and previous weekly fractal resistance that may converge also with a visit to this major 38.2% Fibonacci retracement projected at 93.60. Of course, as I said multiple times, it's a step-by-step process. The price can fail to break above these highs. Let's wait and see. Note that the Canadian dollar is already trading below the recent lows, which at some point we expect to see. At this point, we expected to see the crude oil breaking also the previous highs in this case, which is not the case. But even though, pay attention to moves to the upside if the dollar CAD starts or keeps moving even lower. Let's move forward. Aussie versus the Japanese yen. So we have this trend line resistance covering these previous structure highs. And as I shared before, we have these bullish 26.18 printed at 88.86. So we are now approaching what we may call the potential ABCD pattern. So this is a symmetrical, it's kind of a symmetrical ABCD pattern. So if we project something like this, and that pattern will also converge with the default target for this double bottom pattern formation. So we have a potential symmetrical ABCD pattern, and also which it's not impossible to see because we have these bullish 26.18 actually suggesting the formation of that pattern. So pay attention to this ABCD pattern. We expect to see a retracement after the formation of that pattern. Let's see how it will work. 93.29, it's a default target zone for this double bottom pattern format for the Japanese yen, for the Aussie versus the Japanese yen. But I'm paying attention now to this price on previous structure highs and fractal resistance right there. So pay attention to this pattern also unfolding on Aussie versus the Japanese yen. I will repeat myself. Dollar, the gold charts, previous structure support levels, we're still threatening this price zone. We have a bearish scrap pattern printed there, as I shared before. Recently, actually this session, we have what we may call a decent three drives pattern formation right there with clear divergence between these highs. That pattern suggests, a three drives pattern suggests a move and a retest of this daily fractal support. So that represents a fall about 1.6% from the daily fractal, so from this completion point of the pattern. But the crab pattern also suggests a deeper retracement, as I said before, something similar, something equivalent to a 5.5% drop below this golden Fibonacci, which is the completion point of this pattern. So we're still holding those shorts towards these Fibonacci levels. Of course, as I said, I can be wrong multiple times. I just don't want to stay wrong. So admit when the price invalidates the pattern, exit with your loss, embrace your losses and move forward. Okay, so minimize your losses, maximize your profits. It's the only way to play the market. So if the pattern plays for you, works for you, it will bring some profits for your account. If the market fails you, it will not be so dramatic. You know, that failure corresponds to a minimum percentage of your equity in general. So basically, that should not bring a lot of damage. So it's a loss. Move forward and try to maximize your profits the next time. So, but I still expect a move to the downside on gold, specifically after this 3 drives pattern formation, which converging with the formation of the crab pattern may increase the probabilities for a move to the downside, even though even with all those odds in that direction, we can be wrong. So even we may have 3 patterns suggesting a move to the downside, and eventually none of them will work. That's how the market will react sometimes. Even though I'm still waiting for that to happen. So let me also cover the Nasdaq. I shared this 2618 pattern formation completed at the golden Fibonacci level. So that pattern depends on this double bottom printed before. So we have the double bottom confirmed with the violation of the neck, and then the price starts to drop, starts to fall and to retrace back to the 61.8. That sequence, so let me draw that sequence for you. This sequence between a double bottom, a broken neck, and the pullback to the 61.8, that forms the 2618 setup. I'm sorry, the 2618 double bottom back to the 61.8% Fibonacci retracement level, and that pattern suggests a move to the upside. Okay, so that being said, we entered this trade. We have a trade. I pushed that pattern for my subscribers, so they still holding this position. We have our stops positioned right below the lows of the double bottom. Since that pattern depends on this double bottom, we just need to see 1 point below the double bottom to invalidate that pattern. We don't need to force it too much or to extend our stops and to wait a little bit. No, the market just need to vanish with that double bottom, and it will invalidate immediately the 2618. We can't rely on the default targets for that pattern anymore if that happens, and for that reason I put my stops below the previous lows. Adjust your position size, decrease your position size if you need, but your stops needs to be positioned below the double bottom. Then we still holding that trade. We have first targets projected at the previous structure highs in fractal resistance. I have a second target then projected at this golden Fibonacci, the 38.2% Fibonacci retracement level from the highs. So we have a second target projected there. In fact, we can see a very strong move now happening on the Nasdaq. I will not be surprised to see our targets finally being targets or being hit today, or eventually between today and tomorrow. We may see our targets being reached for that 2618 trade setup. Another pattern that I want to share with you, let's go to SPX 500, which is also approaching this trend line resistance. I admit that violation of this trend line should trigger an assault to or a visit to this weekly fractal resistance. I draw this eventual cup pattern a few weeks ago, or last week I believe, saying there is a possibility of a retest of this fractal, and if the price starts then later to fall, that may help the formation of that handle. And of course, if that happens, we will pay attention later with the breakout of this weekly fractal resistance positioned at 41.41. This is my bullish, let's say this is my bullish level for SPX 500. I'm calling the attention for this price on quite a few times already. If the price breaks above, that should trigger a move to the upside. Note that we are also threatening this trend line resistance, as you can see, with SPX 500 finding support finally at that trend line. So that should also trigger a move to the upside. Even though I can be wrong, and we're still facing this, what we may call a trend line or a pressure trend line resistance, or an element of resistance covering these recent highs. So let's pay attention how it will react from this price zone. No clear patterns emerging, of course, unless if you want to try to take advantage of a breakout of this descending structure. If you think this is the moment to try it, probably it is in terms of risk reward. If the price starts to approach the highs, you'll start to lose the friendly risk reward you can take advantage from if you trade from here. Okay, I'm not saying you should. I'm just saying if you are thinking on possible positions to the upside on SPX 500 and take into consideration the breakout of this descending momentum, eventually you are facing one nice price zone to try it, or for your first attempt. Now, and this should be controversial because I have shorts also positioned for the German DAX. We have this bearish scrap pattern, the red one, printed at 15,286. So that being said, that's a golden Fibonacci extension level, so I will not be surprised to see the German DAX. Actually, that's the default expectations. As you can see, we have a nice first reaction after the formation of the pattern. The price forms support at 14,900 and then starts to bounce and starts to move sideways. We are kind of inside of a range, and inside what we may call, or many will call this a bullish flag pattern. So at some point, if the market breaks above, it should trigger a move to the upside. I agree with that, but even though it's not the first time we see a bullish flag, when we see something that what looks like a bullish flag pattern, and then the market breaks the support. So for that reason, pay attention to that pattern. For that possibility, we have that bearish sharp pattern, bearish crab pattern already completed at the golden fib, and that pattern suggests a move towards a 38% fib, which is projected at 14,600. So that being said, the previous highs in fractal resistance should be retested again for the German DAX. Then we have also bonds and bunds, 10 years specifically. I want to share this pattern with you, the eventual head and shoulders pattern formation. I shared this pattern yesterday among the communities I work with. We have this daily support at 114.09, and I believe that a clear breakout of this structure should trigger a move to the downside for the 10 years. Same pattern may emerge for the Eurobond with the head and shoulders formation and with support at 137.53, which should trigger a move towards also the Fibonacci, the 200 Fibonacci extension level, 135.12. On both situations, we can be wrong, and the market will hold above these fractals, which should trigger a move to the upside, or more continuation to the upside. Note that the 10 years, we have also this cup, the handle, a move above the cup, so a breakout of the resistance, kind of validating the potential move to the upside, and then we have this pullback to the 38% fib. So we have a 38% Fibonacci retracement level from the cup to the bottom of the cup to the recent highs, acting as element of support. So that may also, so if that continues to offer support, we may see that cup and handle formation being triggered as soon the price starts to approach and break above this daily fractal resistance. We have targets for that cup and handle projected at 118.19, 200% Fibonacci extension. That should also converge eventually with an approach to the highs of this ascending channel under formation, so pay attention to that possibility also. The same may happen for the Eurobond, of course, but just to call your attention for the pattern, not for speculation. I'm calling your attention for the head and shoulders pattern formation, because it's the hedge may emerge if the price breaks below the daily fractal. So pay attention to a move to the downside. I shared last week, I believe, or at the beginning of this week, I'm not sure, but I also shared this bearish crab pattern printed for the FTSE, very similar to the German DAX. We have also targets for that pattern projected at a 38% fib, so we expect to see at some point the price approaching this zone. But again, nothing is 100% granted, and especially if you trade the financial markets, you are already familiar with that expression. Nothing is granted for sure, and the only thing that we can control is the risk that we use to trade those patterns. So that's one of the reasons why I like to share those patterns, because they allows you to identify your targets, your exits, and taking that in consideration, you can adjust your initial position size before pushing your trade, trying to have full control of the risk you put in that pattern. So that being said, we have also the FTSE with that crab pattern. We note that we are being supported by these 2 hours 200 moving average. As you can see, very, very nice support there. Let's see if the price pulls back a little bit. And for today, I want to finish with Ethereum. I shared this trade on socials, specifically on Twitter. I'm not using Facebook anymore not as a company, because this is my private service, but I just use it with a private or a personal account. I don't have I don't have my channel for my trading Jazz FX channel. I don't have my page there anymore. So I used to, but I closed that page. So I keep only I just post some stuff on Twitter, and of course on my Discord server. If you want to join me there, you are also welcome to join the free chat room there. I post some charts there also. Of course, the main objective is to allow my subscribers to get to follow my studies and my charts and the patterns that I share with them in order for them to trade them. And that's the place where I share some of these trades that I talk to you, that I share here with you. So that's the place where I share the strategy that I use to trade those patterns. So of course you are invited to join there, the free chat. But of course, as I was saying, the main objective is to provide my subscribers in a private area of my Discord server with those patterns that I share with them. I want to call your attention for Ethereum, just to finish this process for today, or this video for today. We have nice support at 15,000. So we have this support below, acting as a neck also for a potential edge and shoulders pattern formation. I'm waiting to see at least a retracement to the 38 Fibonacci, just below the support. As I said before, though, this is the default target zone for the bearish bat pattern printed there, so we still expect that to happen. As I said before, don't be surprised to see a retest of these previous highs. We were trading inside this range after completing the pattern. We started to see the price starting to recover from these lows after the formation of these fractal supports. And I said, don't be surprised to see a retest of the highs. The pattern will remain active because you need to protect the bearish pattern with your stops above the starting point of the pattern. So your stops needs to be positioned somewhere above that starting point. But that being said, we are now facing a potential edge and shoulders pattern formation with support at this previous fractal there. That being said, a clear violation of this fractal will suggest a move not only to the 38% fib, which is the default target, as I said, for the BAT pattern, but in fact it will suggest a move to the 200% Fibonacci extension level back to the weekly fractal resistance. In fact, we have the 200% Fibonacci extension nailing the previous highs in fractal resistance, weekly fractal at 1352. So that's where that's the default target. Of course, as I said multiple times, we don't know the outcome of those patterns. Sometimes the market will target those levels. Sometimes you'll find support before targeting those levels or before achieving those levels. Sometimes it will target lower prices or other prices below or above those default target zones. That being said, pay attention to these edge and shoulders pattern formation. As I said before, and I shared here with you, of course, a clear violation of this fractal will invalidate that BAT pattern, and we will pay attention to the potential crab, which also nails, or almost nails, the previous highs projected at 2040, so the previous monthly fractal resistance right there. If the price fails to find resistance and being followed by a retracement, we may see a move to the upside for Ethereum. Of course, Bitcoin should also follow the same in terms of momentum. If Ethereum starts to trade higher, probably Bitcoin will start to trade higher also. Even if not with the same magnitude, they should also trade in the same direction. Now, those are the patterns that I want to share with you. But I also want to share with you other charts related to the patterns that I share among my subscribers. So I have my Discord server. I shared already 122 positions and trades and patterns, trade suggestions and patterns that I share there with my subscribers on Discord. Since I migrated from Telegram since October last year, I migrated from Telegram to Discord. So I created my Discord server there. I have a free chat, as I told you before, but I have my private area there for my subscribers, and all the trades that I share there are documented. So I have my journal where I share my positions, and I give access to all my subscribers to check that journal and also these performance dashboard charts. So if you have any interest to trade those advanced pattern formations, I suggest you to give a try and subscribe the channel. Go there and try to get involved into this process. And you have also access to these performance charts. So this is my general performance when I share. Well, after sharing all those patterns, this is the chart that I have to share with you based on the risk reward that I use. This is the pattern that you should have if you trade all those positions. I have other data elements here. As you can see, I trade with a 46.2% win ratio with 55 records and profits, 64 positions in a loss. So that's one of the reasons why you need to be in full control of your risk, maximize your profits, minimize your losses, because you can have a performance similar to this one trading these ratios. Then you have also number of trades per time frame, from the 60 minutes time frame with 27 records, a daily time frame. As you can see, I use most of the times I use the 240 minutes time frame with 49 records already. If I push a trade at the market price, if I post a pending order, a buy limit or a sell limit to enter the market, my preference here for each one of the pairs that I push a trade, number of trades for each one of these instruments, number of pips. Also, of course, you need to count those pips separately. You don't count DAX or the index markets, you don't count them the same way you count the measures. As an example, you don't count the yen pairs the same way you count the measures, as an example. So you have also some filters here. You can exclude, as an example, you can exclude all the ticks or all the assets that you don't want to count, in order to get a better look in terms of pips for the Forex, as an example. So you have the Norwegian krone, the Norwegian krone and the Mexican peso. You don't count them the same way you count the Japanese yen or even the major. So basically, most of the times we count them separately. But even though you have the number of pips for each one of those instruments, if you are in profits, if you are at negative, you can also, of course, reset all these and select one by one. You can just, okay, let me see how Andre is trading the euro versus dollar, number of trades, 4 positions only, 4 losses, by the way. The last 4 positions that I trade for the euro dollar, none of them going in the direction that I expected. Aussie, you have 3 records in profit, 5 records in a loss. You can also, of course, play around with all those filters, of course, and check. As an example, let's see just for let's just see for the equity market how I'm being performing over time. So we have the German DAX, one of the most actives, and then we have a loss for the Nasdaq. We have an open trade for the NASDAQ, which I expect to cover this previous loss. So it's a step-by-step process. It's a long-term process. But just to say that if you want to subscribe and to get to wet your feet with harmonic trading and advanced pattern formations, I invite you to my Discord server, and from there you have access to all the trades that I push. So I post my trade ideas on my Discord server. So from here you have access to all the ideas that I share, all the patterns, very well documented with my entry point, my stops, my target zone, what to do when the price approaches the target, what to do when the price approaches the second target, and of course the most important one, you have also your stop level to tell you to, let's say, enough, you should jump out. So since October, I believe October 2022, I started this. I migrated, as I said, from Discord, from Telegram to Discord, and since then, actually, I created the channel in August, and since there, I shared already 122 positions with my subscribers. So from that being said, I invite you to join, of course, but just to remember you that you have access, a clear image of everything that I share there. There's no secrecy, there's no hidden stuff. So that's everything clear for everyone. I want you to get familiar with that process. That may help you to create your own methodology, your own trading strategy. That's the first step that I want to offer you here. If you subscribe, it's a big help for those who are starting to learn the market, starting to learn how to trade them. It's the most important step. It's how to create your strategy to trade a specific methodology. The strategy that I share here, I believe it may bring you a lot of value for your curve, for your learning curve, and at least that's my wishes. So I invite you to do so. That being said, that finishes my video for today. I hope you enjoyed the charts. Of course, this last part was just an introduction to my, just an add-on to my Discord server. But of course, if you enjoyed the charts and the patterns that I share here and the content that I share, I don't need to ask you to subscribe and to press that notifications, the bell button, just to get my notifications once I publish new content here. I don't need to ask you that, but of course, it's always the same. Do that if you enjoy the video and the content that I share here. That's all for today. That's all for today. I wish you a very good day for today, and of course tomorrow it's Friday. We will be here again. See you tomorrow. Nice to meet you here again today.